right? You just buy things at a lower average, stick to the plan.
Yeah, pretty much. Just average down when you can. And just keep up with the plan.
Yeah, for sure.
And what's interesting about the downgrade from Moody's, it kind of came out of nowhere. And this surprised everybody after the market closed. And then everybody's trying to figure out what exactly that means. And I don't know if y'all saw any of the posts from people that are a lot smarter than I am, that it's not that big of a deal when you look at the whole grading system. It's happened before a few years ago. And then everybody got scared, and then the market sort of bounced back after a day or two. Everybody forgot about it. So we'll just have to see what happens on Monday. If there's any other news, if not, and maybe by Tuesday or Wednesday, we'll bounce back up and something else will be on everybody's minds to talk about. Hopefully, we'll have to see.
Yeah, for sure. I mean, we'll see, I guess. It'd be cool if we could continue to climb up, though. But yeah, so I think some people saw I cashed out all my realty holdings, ticker signal O, and transferred it into QQQI. Seemed to be mostly received from the people that commented, but I did get some hate mail from the Realty Income Tribe that I abandoned. Yeah, I just thought I could maximize that money a little bit better and try something new after 30 months of being in one holding. Overall, I think I was neutral or slightly up. The dividends were nice, but I think I can do something a little bit different. So I'm gonna try it, see where it goes.
Yeah, I think that's smart play, really, because of just for the tax benefits that you're going to get and the dividends you're going to get or income from that. That's fantastic. And like you said, it's sort of a cult following. It seems like over the last 3 years, everyone's sort of been talking about a lot more than previously, just because of interest rates. Saying, now that as soon as we get interest rate cuts, O is going to take off. Well, O never took off or never recovered from during the shutdown when we had no interest rates. But no one talks about that, really. So I think it was a great idea. And I think you'll be happy as time goes on, too, because you're going to get a lot more income, better tax treatment, and a more diversified ETF. So it's a win-win-win.
Yeah, and I kind of liked the newness. I mean, QQQI hasn't been around too long. I think it's got a little bit to grow, right? Obviously not financial advice on my end, but just my own thoughts. And I felt like I could maximize that a little bit better. It was cheaper per share with what I thought was a little bit more upside. So we'll see how it works out. I kind of have a rule, though, that I won't do anything or buy anything I'm not willing to hold for a significant amount of time. I'm definitely not a trader, so it was not done on a whim. I definitely thought about it.
Yeah.
Looks like we finally got digital.
Hey, what's good,
Go
y'all?
ahead,
Can
John.
y'all hear me?
Yeah, we can hear you now.
All right, cool. Yeah, I just switched to the laptop because my phone app was glitching out like always. So I'm on the laptop right now.
Yeah, I'm at work on my computer and it's still a little glitchy. So we'll do the best we can.
Sounds good.
Or are you going to say, John?
Yeah, I had a question. Did you look at the other NEOs ETF, the real estate IYRI, and look at that and think about getting that instead of whenever you're trying to replace your O?
I've looked into it a little bit. I'll probably still look into it, but I honestly didn't look into it too hard. I already had some QQQI holdings with Neo, and I just used it to consolidate to bolster that really. But I will look at the IYRI a little bit more in depth moving forward.
I think it was a good move, honestly. Because I don't know, O is solid, but at the same time, that thing grows like a snail too. And so it's just kind of, I don't know, it's either or with O, honestly. I feel like that's definitely kind of for sure a retirement type of, stock to where it just holds its value a little bit and then the dividends is more stable and then it's a little like penny increase or whatever every month. And so I feel like that's fine to get rid of it, but I feel like it's not for everybody as well at the same time. I feel like it's for people that are kind of, out the door retirement type of thing, in my opinion. So, like, I don't see anything wrong with you shifting out of that to QQI personally, because you really, like John said, you already get tax treatment, it's already better as well, and then potentially more divvy play as well. And so, to me, I don't know, all around, I think it was a good play.
Yeah, and that's the great thing about investing, right? One person's plan doesn't work for somebody else. I'm pretty aggressive. I've said that before, and I mean, not that I think the Neo's funds are super aggressive by any means, but yeah, I'm just trying to bolster stuff over the next 6-7 years, and then I'll get significantly more conservative as I get to retirement age. But that's the whole game plan, is to maximize everything I can for the next 7-8 years for sure.
Yeah, I think with me too. Like I like my little holding with like JPQ as well too. But I always think about like going over to like QQI too for the tax benefit. And so I'm kind of like in this mindset of like going back and forth. And so like I'll probably think about it really hard when I hit like 200 shares of it, and then I might just consolidate over honestly and just see where it goes from there. Because it's hard to pass up tax efficiency, especially with these ETFs. Like, it's really hard to just like pass this up, and so we'll see.
Yeah, I can
Yeah.
understand that, Eli. And I want to touch base. I don't want to didn't want to make you mad about my post me messing with JebQ or Jeppy. I was just stating numbers and facts. So I didn't want to apologize if I said anything that upset you.
Nah, it was fine. I always know it's kind of funny. I always take everything lighthearted. I don't really take anything to heart with like investing. So I already kind of know because like when I first seen QQI anyway, I was like, man, I was just looking at through their methodology. Like it's just really hard to beat, man. Like, and then they give you the consistency too for each payout, and so it's just one or the other, honestly. And then you just gotta do what's best for you. So it was no offense taken with those. It was all taken as like hearted joking around, honestly. So you're all good, John.
All right, that's good. I figured I just wanted to make sure, but I did want to touch base with. I run one of my parents' accounts for them, and I've had them in JebQ for since 2022, so they've had it for a long time, and it's been a great fund. But I sold. They had 330 shares,
Ooh.
and I cashed out 330 shares, and I put 200 of the shares in GPIQ,
Mm-hmm.
and then another 160 shares I put in GPIX 2 days ago.
Nice.
So I feel better about that just because they're older and the tax treatment's a little bit better now that we know from the Goldman Sachs ETFs. But man, JebQ, hey, they overall that ETF for that long was up over almost 70% total return in 3 years for them,
Ooh.
counting the dividend. So I mean, it's awesome. It's a great fund. But yeah.
Yeah, for sure. I've sent out mic invites to everybody, but if somebody else wants to grab a mic, send me an invite. It looks like one of the glitchy things is they may not be going out. I'm not really sure. I tried to send one to Prolific and Ashton, and just about everybody else that's here. But yeah, just on the topic, I hold both the Jeppy and the both of those funds. So I've dabbled with them. I didn't change those holdings. I like them. Yeah, I didn't pick QQQI over them for any particular reason. It's just something I did.
Yeah, I wonder, will these ETFs, like these income ETFs, replace bonds for people in retirement too? Because if you're gonna go income, I feel like bonds are taxed high too as well, right? Because if so, I think like Neos, they're like QQI and so on, is probably a better bet for like retirement instead of going the usual traditional way with bonds. So I was just wondering.
Yeah, for sure.
Yeah, so I'm wondering if we'll see more income ETFs being used in people's retirement over that traditional way. So I'm really curious on that.
Yeah, my biggest
I was
holding with
muted.
the ETFs is still SCHD, but y'all definitely got me interested in the JEPQ for sure, especially the numbers John be putting out.
Yeah, I have SCHD also. It just doesn't pay monthly, right? It's just a little bit more stable, and they mix up their holdings constantly.
If I could touch base on what Eli said, I follow some of the advisors and portfolio managers at Vetify, and they have videos on YouTube, and I watch them also. And for the last couple of years, yeah, there's been a lot of retirees and people even really in our age that are moving away from bonds into income ETFs. So that's already happened because it makes sense. And now with the ETFs that have the better tax treatment with more yield, just like what we do. Yeah. So yeah, there's definitely a change over from regular bonds into the more income ETFs.
I got you. So is it the tax benefits that mainly put ETF on your radar?
Well, for me, it's the income first off is better than with bonds, depending on what you get. If you want to get municipal, if you want to get corporate, or if you want to get just the 30-year, it just depends on what you're wanting to get and then what tax bracket you are in. So that's sort of the way it was back in the day. You would get different bonds for the tax benefits, but you get a lot lower yield. But the game has changed with these income ETFs, where there's not a whole lot of reason to get into bonds unless you're depending on what tax bracket you're in and what state you live in. Like if you're Elon Musk and you're on a very high tax bracket, it's where you want to be able to get in New York or California and get into those bonds from those states where you'll be totally tax exempt. Then yeah, that makes sense. But for normal people, then the first 2 or 3 tax brackets, the income ETFs that have tax benefits, that's the way a lot of people and advisors are going with now.
Okay, I got you. Yeah, I was curious because, like I said before, I'm more in started off with crypto, so I'm still learning the stocks and ETF game. Y'all definitely put me up on a lot of game with that, so I appreciate it.
Oh, sure, you're welcome. I love talking ETFs and sharing charts and dividends and everything else.
Yeah, those breakdowns are very helpful, man. Keep doing that for sure. I like your content, man. For sure, for sure.
Thank you. I will appreciate it.
Hey, what's good, Prolific? How you doing, man?
What's good, my guys? How's everything?
Everything's good, bro. Everything's good. Trying to get these videos down. You feel me? Trying to get fluid like you is on those. That'll come with time.
Yo, you doing good, bro. You're doing good.
Man, hey,
It's just, Go ahead, brother.
Man, your last video, digital, was really good. Really good. I was really impressed by your flow and everything, man. Really, really impressive, man. Keep that up. Yeah.
I appreciate it, man. This time I took the time to, like, you know, take my little notes and take my time with it instead of I rushed the first one. I was just trying to get something out. But man, I appreciate it, man. It's motivating hearing that feedback for real. Thank you.